So the auto stock seems to have shifted in the top gear. The Nifty Auto index is at a record high. So let us try to understand how the dynamics of the sectors are changing and going forward, what is the way ahead, especially keeping Q1FY23 in perspective. So let us start from the up move that we are seeing in the Nifty Auto index, which is actually up 13% on a YTD basis, and all the leaders have contributed quite very well. A sharp move coming up in a stock like M&M, which is up 40% since the start of the year till now, and even a stock like Maruti, Suzuki and Ashok Leyland are up 18%. A lot of factors are at play. Firstly, let's try and understand what's happening with the chip shortage situation. So this has been a big worry for the sector across, and now what we are hearing from the companies is that month over month the situation is somewhat easing, and the manufacturer of all these chips, the biggest manufacturer, that is TSMC, that has also signaled that a sector like consumer durables and electronics, the demand from this particular sector is coming down because these companies in this particular sectors were hoarding all of these chips. Now the demand is cooling off from this sector, so going forward we are hopeful that auto industry can also experience the same, but they have also signaled that the capacity will remain constrained during calendar year 22 because of the demand as well. On the other hand, the commodity sell-off is beneficial for the auto sector across, not just the metal, but apart from that, the crude prices have corrected significantly in the international market from their 52-week high, and a sentimental push coming in from a state like Maharashtra recently, where they have reduced the VAT on the gasoline products. Apart from that, if we see on the demand side, superb launches and superb kind of response coming in from Maruti Brezza to Hyundai Tucson and rest as well. So the demand is not constrained, and that's not an issue, is what all the auto OEMs are signaling. And if you see the FADA data, that has been holding decently too. What's the way ahead? In Q1 FY23, the analysts are expecting that the margins could be holding up decently because the commodity sell-off that we saw happening, that's definitely good for the sector, but the benefit comes with a quarter lag. So in Q2 maybe you can see the improved margins, but talking specifically of Q1, there were price hikes across the board, and this should definitely help the margins of the company. The volumes did hold up decently. On a quarter-on-quarter basis, they were up 10%. So all of these factors should come at play. So this time a decent set of numbers expected, but going forward, the picture could be actually rosy, where the margins can also get a push from the commodity sell-off happening.